name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. Okay, so we are still in the shadow of a notoriously unreliable island pattern from early through to mid-March. A preliminary target X in the 435.5 area and an optimal target X1 in the 430.5 area. I've kept target X, despite it already being reached, to give an idea of the measuring moves necessary. I wrote 2 weeks ago, and I quote, "Since then the market has seemingly rejected the idea of the island and instead turned back up with a bullish harami last Friday." That's now 4 Fridays ago. That took prices up over the congestion of highs between 440.25 and 442 even. End of quote. I added later on, and I quote, "For now I'd like to see what happens before I revise or retire target X1. End of quote. Well, last week has been a schizophrenic market. We ended the week with a weekly key reversal up, but it was with that last Thursday also being an immediate countering bearish dark cloud cover pattern and a bearish opening black Mariposa. That is both at the same time. This obviously offset the bullish weekly key reversal up quite a bit. Since then we've had the odd sight of all of this week's action, that's Tuesday through to yesterday, having slightly rising indecisive spinning tops. Today is higher, but it is again within a narrow range, and there is no guarantee that we'll not finish the day with another indecisive pattern. So where now? I laid out the chances last week and they still seem valid. We also have the possibility of 2 patterns now, developing over March and into the future. A possible double top or a possible bullish ascending triangle pattern. Well, ascending triangle pattern, let's not call it bullish just yet. It is too early to say which pattern, if any, will fill out, but it is worth keeping a close eye upon both, especially after today's beginning to move higher market. Winnipeg canola. These past weeks, we've seen the market decline, initially down towards the Fibonacci and over congestion in the 698 to 693.60 area. However, as prices dipped down under the combination of the very gently rising short medium moving average, currently 722.20, and the very recent 50% Fibonacci line at 719.20, some indecision and some volatile actions started to happen. This could be related to the former moves lower, or additionally to the rising late October 2020 to date uptrend, currently at 714.80. This is because in quick succession we've had last week a bullish harami, just, an immediate countering bearish engulfing pattern, a counter to the counter bullish engulfing pattern, a third countering bearish dark cloud cover pattern, and then on Monday this week a 4th countering bullish double. As I said last week, all this indecision puts the recent bearishness under threat. All this ties in with the idea I put forward 3 weeks ago. I wrote at the time, and I quote, "So what's next? Well, there is something that pops straight into my mind on seeing the action. It is whether this is a bearish bump and run reversal top. It's too early as yet, but it looks familiar. More on this when the trend line for this pattern is established, if it happens." End of quote. I added 2 weeks ago, and I quote, "It is not a perfect trend line, but the uptrend from late October 2020 to date is a little below, running vaguely parallel with the lows of January and this month, that's March." End of quote. It's not perfect, but it might be a candidate for that trend line, for the bearish bump and run reversal trend line. What we saw last week and at the beginnings of this week has been the market deciding if it wishes to follow the bearish bump and run reversal top ideas or not. It hasn't become clear as yet, but please pay close attention. as it may soon. Since last Monday's bullish action, we've had a bullish resurgence of sort. Please do not be taken in by this. One can expect such a small bullish bump in such patterns. It very much depends how far the market will take the top side. I'd suggest a cautionary look at the former March 2008 all-time high at 770 even as a suitable cutoff point, all things remaining equal. Bursa Malaysia crude palm oil. After all this time, I have finally decided to draw a new mid-October 2020 to late January 2021 bullish shift pitchfork, which has replaced the more acutely bullish Andrews pitchfork for the same time period. Why now? Well, it just seems to be a better fit with the action since late January. So, last week we ended up with a renewed bullish pressure, initially from the low on Wednesday last week with a counter to the counter bullish thrusting pattern that had become entangled with the combination of the short stroke medium moving average currently at 38.41, the recent 50% Fibonacci line at 37.81, and above all, being batted cleanly back up as prices approach the strong looking medium moving average currently at 37.19. This was followed last Thursday with a gapping higher move, and we've moved higher since then, bar an indecisive doji cross last Monday until today. The move higher had pushed the market back up over the middle time, currently 40.37 of the bullish shift pitchfork. However, the same resistance that we saw 2 weeks ago over the congestion at 41.16 that caused a shooting star pattern type 1 bearish and gave a high of 41.63 seems to have kicked in today, only with a wider range and a lesser looking outside day for high at 41.75. Now there seems to be some resistance overhead, probably caused by the gap back in the middle of March between 41.66 and 42.21. That was actually part of the recent 2-day island pattern, and that is keeping a lid on prices. Just be wary of that. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.